Well, hello everyone. Brian here, and today on today's analysis, I'm going to be doing something different. I have modified our strategy, our London strategy, a little bit, thanks to the ICT mentorship master, Mr. Michael. So today, as you can all see, this is GBPUSD. We are on the 1 hour time frame, right? So I'm going to be showing you guys how to trade from the using the 1 hour time. I mean the one day, the daily time frame, but applying our day trading strategy, right? So this is the let me talk about the previous candlestick first. So the previous candlestick is this one, right? This is the previous candlestick. So what I'm going to show you guys, this is basically maybe a candlestick pattern lesson, but it's going to be much different than when I was going to teach you just the open or just the something here. So I'm going to show you guys how to identify the open, close of the candlestick. So this is a bearish candlestick, right? The black candlesticks are the ones that are bearish or the ones that are showing that the market was selling. So if you want to identify the high of the candlestick, I mean the open of the bearish candlesticks, this is the body, this is where the body of the candlestick began, right? I just plot this. That is where my candlestick began opening. That is the open of my candlestick. The moment my candlestick opened, from there it started going down. So the reason for this candlestick wick right here, it's because when the market opened, the first thing that it did, it's either it went down first and then it closed here. This is where the candlestick closed. So that is how I can identify that it's bearish. But had it opened and it went up, kept going up, it would have been bullish and it would have been a blue candlestick, and it would have closed above. That's why but because it closed below, we do identify that it's bearish. So I hope you understand that. But that's not the whole reason for this strategy modification. So when you want to be trading from a higher perspective, or looking to modify your entries, you're going to identify where your candlestick open is. And after identifying where your candlestick open is, you must know what we call accumulation, manipulation, and distribution within that daily candlestick pattern. Yeah, within that daily, you must know what happens and where you can identify it. So the reason why maybe after the market is, I hope you realize that all these candlesticks have candlestick wicks below and above them. So the reason why the market, when it opened, it went up, it was for manipulation and accumulation purposes, right? Remember, we are dealing with so for that, we are dealing with institutional traders, the smart money, the people with deep heavy pockets. So they want to take money from us, we want to take money from them. So the reason why the market jumped up, it was so that it can manipulate people into thinking that okay, maybe the market might be buying or something. But rather, that would be for retail traders. But us as institutional traders, we should know that the manipulation, we should know that the jump up is for manipulation purposes, right? But we should also prepare to start buying at the highest premium, area, right? Because when you start buying, there's one rule of the ICT, though, the smart money concept, which says we in the forex market, we buy below the market open, and we sell above the market open. So let's say the market had opened here, we would have wanted to be buying in this area whereby you see this whole candlestick. We would have wanted to be buying in this area, right? So because now it opened here and then it went down, we would have wanted to buy above this area. So we buy above the open, we buy below the open and we sell above the open. So currently, let us see where we are right now. The current candlestick of the daily time frame, right? This is our candlestick open. That is my candlestick open. And then there is that week all the way there. That is where the candlestick week ends. So many messages. Okay. So with this identified, with this identified, I do know that the market has went up. It has probably manipulated whoever it has manipulated. But for accumulation purposes, what is accumulating in this area? What would be accumulating in this area of ours is what we call short positions. Why short positions? Short positions, I mean sell positions, because that is where we are going to be looking to buy. We sell. Yeah, that is where we are going to be looking to sell. We sell above the market open, right? We sell above the market open, of which the market did go down. So now that we know that the market has to, we should be looking for sales above the market open. We are going to go down into smaller time frames. Our higher time frame of the daily strategy, the 1 hour time frame, 15 minutes time frame, and the 5 minutes time frame, right? So as for distribution is whereby let me use the previous candlestick as an example again. Distribution is whereby the market is done with the accumulation phase there. Now it's dropping. The momentum is going. This is the distribution phase that is going on that I'm talking about there. So let us go to our 1 hour time frame. And let us see how the chart is now that we know where our accumulation phase was occurring, right? Okay, so this is the 1 hour time frame. As you can see, this is the accumulation phase, right? So if it's like this, we do know that the market had opened here. It opened here. This was just a drag. So the market had opened in this area, went all the way down. It went down first, as you can. This was the open, right? It went down first. It went down first. It went down. Oh, my bad. My apologies. I did a great mistake. It's not necessarily like that. The market has opened. I think it's somewhat somewhere right here. This is where the market is open, somewhere here. And then after opening, the market decided to become in a it went in a consolidation first for a couple of minutes. For a few hours, mind you. This is the 1 hour time frame. The market opened here, went into a consolidation for a few hours, and then went up. But then it went up here again. Yeah, but I'm sure you can understand my point, right? Let's just say the market opened here, and then immediately at the open it went up, right? By going up, it went into this order block, which wasn't a high quality order block because it had already been mitigated before. And then from there, then we know that all the manipulation tactics have been taken out there. If you had entered your entries at this order block in the accumulation phase, you would be in deep profits right now. But the market did try to come back to this order block again. It's not a high quality order block. It's already been mitigated, right? So London session open. Let me enter our session timings. London session open, it shows us that it opened. Let me go to our time frames, 1 hour time frames, because we are going to be bearish and we are targeting. This is the open, so we could be selling GBPUSD right now. Let me just put my stop loss just a little above there. So go down to the 15 minutes time frame. Let's see what it has for us. Okay, London session opened here, and then it shows us that it went up. Remember what our strategy tells us, that if we are looking to be bearish, then at London session open, we should be looking for a move against our anticipated direction. In this case, we should be looking for bulls, of which we got the bulls. We can all see, we can all see that it jumped up. So now we are going down with it. So enter your security positions right now, and then we might enter more positions at this level here, because this order block is still, this is a high quality order block. It's still not been mitigated yet, as of yet. So we can enter our security positions right now and adjust our entries to that order block right there. Thank you, Tim.